Hi, today is Tuesday the 12th and this is a late recording of the weekly recap. I could have done it last night, but for those who follow me, you know I've got a lot of work on my hands at the moment. So let's do it quickly. October will expire in a few days. I just left a CCS here, absolutely no risk. And as a matter of fact, I couldn't even close it because there's no longer any liquidity on the call side above 45.75. So, okay, it's using a little bit of margin, but that's not a trend smash, especially on the PM account. Now, for November, this cycle was a little bit different because when the market dropped 2-3 weeks ago, I deleveraged, I reduced the position, and this is a slow reconstruction. And this trade is fine as it is. If the market keeps going down, it has a good coverage for at least a few percent. I mean, I should normally get my delta flat down to 4200, and 4220 is a pretty strong resistance. If the market gets to 1%, just above 1%, considering my leverage of 1.5, I will just leave it there, probably close it. Or at the very least, deleverage it further by dropping the lower combos. Probably, I showed some time ago a fail-safe scenario where I would probably sell a PCS here just to finance this. So that would be my fail-safe scenario, could be something like this at this stage. Well, it looks like the market has changed, so I probably would have to even buy lower here, by something like this. I could even go for this one. This is a good fail-safe, okay, $200, and this one will have, we can ignore this little dip here. Yes, it would still use 7K, which I can still figure out later. But if the market would go into a crash, this would be my fail-safe adjustment. And I would suggest you prepare this one. The chances of the market dropping like a bomb is very limited. But as you can see, I would have negative delta all the way down. I mean, really, I would even be Vega positive for a while. So really, no trend smash here. Are also welcome to do that even now. If you just want to take it easy, not have to worry about October, not to have to worry about November. But of course, the theta would be now negative, so it's basically a kind of a write-off. Now on this one, what I would do, the market has returned below 43.75. As I said, because of the late reconstruction, I would allow myself up to about 30 DTE to build it further. So I was thinking of a PCS roll, but it could also be one of the same broken butterflies here. Cost a little bit. Generally this late, if I want to be more aggressive, I would probably reduce swing sizes, maybe 75/50, but I mean, it doesn't cost much. If it's about $50, and I would still have time, I'm adding 2.5K here. And let's go back to vol surface. I switched off vol surface for October because the vol surface calculations are absolutely wrong or non-existent in one for short dated options. Be careful if you trade weeklies using one. Don't try and use volatility surface. They have a problem with short dated options. So this is what I would probably do. I would get, I believe this is not 100% correct. I think the delta would be slightly different. This is not a very important issue. But yes, I would probably have a slightly better sweet spot scenario, and that's a trade-off for having $50 drop on the UEL. So that's something I could do. I believe that the fills should be okay. As I said, it would cost about 50 cents, 40 cents. That looks okay to me. So that's something I have in mind. Otherwise, yes, we could do a PCS roll but that would be more, I mean, it would be, of course, a capital constant adjustment. And that would be more betting on the rebound from here. I think the market, if it goes back to the former range below 43.75, it will be erratic, but it would be a lower trading range. So of course I can also go for PCS here and start reducing, let's say -2 here. That's a bit too expensive. Something like this would be actually a good reduction, probably an alternative to the fail-safe scenario, but I wouldn't go this far, maybe something like this. With that, I would take my profit. I would still have some negative delta, not much Vega, but really this is not a very exciting thing. So I think considering the late reconstruction, a broken butterfly may be easier. Okay, so that's it on this one. Really pretty easy. I like to have this bearish profit potential if the market drops. We will see where the market goes below 43.40, which is a fairly good support right now. I think the market has room to go further down. We've got CPI, PPI, earnings coming. So in the coming weeks, there should be more of a bearish bias. Now for December, this one is faring fine. Also, it still has good resilience on the downside. So I don't think if the market would drop, we would have too much of a T+0 dropping. Probably, I mean, I would even say down to 42.20. The trade would be doing fine. So now I will probably add, now VIX is above the third quartile, which is about 19.6. So generally, if you want to be safe, we go for a wider broken butterfly here. I would lose a bit of the UEL, but in a market that is now drifting down, that's not so much of an issue. We've got a lot of long puts here to pull if necessary. The capital usage is low, so this one doesn't really matter. So I remember like a week ago, I was at almost $300, but at this point, exactly for like November, there's no real issue really trying to protect profit, especially that this one still has a long time to go. So to have a little bit more negative delta, all these theta is about the same, Vega is about the same. So this one would have definitely a good resilience. And it may even extend this initial time, about 3 weeks, of good resilience on the downside by using a wider broken butterfly. Of course, it's also tempting to reduce the number of strikes. This trade is a little bit too complicated. That's something I generally do towards the end of the cruising altitude phase. So around 30 DT, I generally try and reduce the number of strikes. Still plenty of time for that. So not much to say. Probably a broken butterfly in November, broken butterfly on December, and that will be it. And I think this can weather the market going down further. If the market goes up and vol goes down, okay, I will start going back to the former management, handling a bullish market in high vol, which is also fairly easy. At this stage, I would still think the market has got room to go down. Probably not, as I said, probably not going down really like a bomb. I think it's going to be gradual reversal. Tug of war between bulls and bears is still fairly balanced, which means that this trade management is still fairly easy. Okay, that is it for now. If you're not on Slack, on the Rhino Slack, please join the Rhino Slack because I give, of course, more details, and you are welcome to ask questions if you have any. Thank you for watching, and bye for now.